Okay, you're with us here on a fresh new edition of Midcap Radar. I'm Prashant. With me is my colleague Sumaira. The markets are down 100 points. Plus, it's been that way now for the last couple of hours. No improvement whatsoever. The market breadth is pretty poor. About 1,500 stocks are lower as compared to about 300 stocks which are higher. That's on my screen. And I think the numbers should be very different on a market-wide basis as well. Roughly a similar kind of situation, all market-wide basis. NBFCs are in trouble. You got private banks which are under pressure and very little help on the other side, from the biggies, be it IT stocks or Reliance or any of those. I mean, very little doing well as far as this Monday afternoon is concerned. Almost a continuation of what we saw on Friday and the big selling we saw, concentrated selling we saw in the last hour, 2 hours of Friday. So we've picked up right from there and it's continuing at this point. Lots of numbers coming through as well. Sumaira, we had RBL. Just before that, I think we had, I think Canada Bank, which reported numbers as well, just before.
Yeah, that's true, actually. So we'll get to all of that in a bit, all the earnings action. European markets have opened, and I'm guessing it should be opening a tad bit tepid, actually. Though there is positive momentum overnight from the US after the, shutdown has been temporarily lifted. But about a 0.25% lower on the FTSE. There's the Brexit debate, the US-China trade talks. So all of that takes center stage for global investors. But first up, these are our top stories. Broad-based selling in the market. The Nifty falls below 10,700. Sensex loses over 300 points, led by selling in ICICI Bank and a lot of the NBFC stocks. The mid-cap index takes a beating, loses about 2%.
The Z Entertainment stock reverses the selling following a deal with lenders to stem the value destruction which we saw on Friday. No respite, though, for the other Z Group stocks and, of course, Dish TV, which continues to be down.
Well, the Adani Group stocks seem to have recovered. Earlier this morning, we saw selling pressure on the entire group on concerns of, high promoter pledge. But stocks seem to be reversing. Adani Enterprises in the green.
The L&T stock bats for the bulls following an overall beat in the third quarter. Numbers, remember, came Friday evening. Management expects FY19 order inflows to beat the initial guidance by a small margin. Maruti slips once again as brokerages cut expectations and targets post a pretty poor quarter.
And the RBI governor takes stock of PSU banks in a meeting with PSB chiefs in New Delhi. Finance Minister Piyush Goyal to attend the meet later this evening.
Okay, Ashwani is with us. Ashwani, actually, as we go to Ashwani, there's another 20-point downtick. So 127 lower on the Nifty. And I think this should be, this is a fresh low for the day. Ashwani, what would you do?
Well, they know what I'm going to say. See, the issue here is that now the bears have the bulls by the scruff of their neck. I mean, if you come off probably 350 points in 3 days, so any sort of bull that's probably there in the market is probably getting out. And with this sort of momentum, I don't think we will stop before maybe even 10,000, 10,200, because from no point, from no support, you had even a 20-point pullback. So that just means that there is no buying. So that way, people who are short should remain short. Those who aren't short probably could take half a position here and look for a bit of a rally to take the other half. But the next couple of hours, the bulls are going to the cleaners. That way, the final hour will be much more bloodier than what we've seen so far. You had, 3 days where we've closed at the lows. That's fairly significant because, at some point there has to be some serious short covering. In fact, today, the last half an hour, Reliance, Bajaj Finance, the big stocks are coming off strongly. So till now, till 10,800, it was basically smaller stocks. But now possibly people are getting out of bigger stocks as well. Having said that, Reliance is a sell with a stop of 1235, target of 1200. Adani Port is a sell with a stop of 350, target of 335. And IGL is a buy with a stop of 270, target of 285.
Okay, Ashwani, you're firmly with the bears, huh? With the jacket and everything.
I'm doing all I can.
Okay, Ashwani, we are sort of grappling with lots of numbers as well. So appreciate your time, and we of course will have Ashwani back on the top of the last hour at 2:30 or so. I think, Sumaira, we have a management ready with us.
Yeah, we have the City Union Bank numbers. They were reported just a while back. It's a mixed bag for the third quarter. Loan growth momentum has slowed down, but earnings have come in above estimates. N. Kamakodi, the MD and CEO of City Union Bank, now joins in. Mr. Kamakodi, good afternoon, sir. To begin with, could you give us some color on the movement of GNPA in terms of slippages, recovery, upgrades and write-offs?
Basically, as you have seen in the past 2-3 years, we are able to see decline in the incremental slippages to closing advances, which we used to see typically 4-5 years back between 1.25% to 1.5%. It almost went up to 2.8% way back in 2013-14 and all. Now it has moderated, and we are able to see our slippage ratio coming down to 1.86 for the to the closing advances for the first 3 quarters, and there is slightly for this quarter there is a spike where the slippage ratio is about 2.16%. But overall, we are able to see improvement. In fact, if you look into the quarterly figure, the additions had been about 165 crore, recoveries had been about 46 crore, and the write-off had been about 62 crore. So net addition is about, like say, we are able to see at about gross NP at 891.9 crore. And we are able to see both in terms of recovery and liquidation of collaterals and recovery and all are getting better, and we feel year end should be better than where we are now.
Okay. What about the NIMs for the quarter?
It's currently at 4.4% for the third quarter.
How does it compare with the previous quarter, sir?
It's almost flat and slightly improved, about 5-6 basis point. And the return on assets for the current quarter is 1.68%, which comes in maybe perhaps the top bracket of the banking industry as a whole.
4.4 would be almost at an all-time high for you as well, right? I mean, for City Union.
Yeah, sort
almost
of.
At peak
we typically used to have only between 3.4 to 3.7 used to be our sustainable range.
Right.
And for the past 2 years, it is hovering above 4%, and it is holding up.
The contribution of treasury income has gone down quite a bit in the non-interest income side. Could you clarify what has happened?
Yeah. In fact, you had favorable yield movements and forex movements last year, and that's why you had substantial profit which you could make in the last year, which those opportunities are not available in this year. In fact, there is about 70 to 75 crore difference in the opportunities where we could make in terms of 9 months profit booked from treasury and foreign exchange market. To greater extent, still we are able to show profitability, PAT growth of about 15%, mainly from better NPA management and lowered provision that is made for your treasury, NPA, which has taken care of all our reduction in the profit from the treasury and other income has been made up from the reduced provision for the current quarter and also for the 9 months as a whole.
Why is loan growth seen a bit of pressure? I mean, why the slowdown? And going forward, where do you see growth coming in from?
It is not actually slowdown. It is the 17% is what we have been stabilizing over a period of last 2-3 quarters. This year, even at the year beginning, we said we should be closing the year with between 18 to 20% credit growth for financial year 2018-19. Looks like we are almost closer to that, and we hope we should be able to touch that 18% plus. And it is this is what we have planned in the year beginning and shared with the market at large, and we are almost in tune with whatever we shared during the year beginning.
Okay. And any early signs of stress in the SME segment, and any exposure to Mudra loans, NPAs there?
Not much. We are basically there used to be stress in the educational loan sector, and SME per se is not something much beyond whatever we have seen in the past, and the stress level at this point of time is as usual, whatever we used to in tune with our past track record, and nothing substantially different from what we saw in the past. It's okay, nothing abnormal or alarming at this point of time.
All right, Mr. Kamakuri, we'll leave it at that. So a lot of earnings coming through. All the very best for the rest of FY19. Meanwhile, Shriram Transport as well has announced numbers, and the stock is selling off a little bit. So the net profit is just ahead of our estimates a little bit at about 635 odd crores. NII is pretty flat. And in terms of NPAs, actually, we're seeing just a tad bit of worsening over there, but not going down well for now. The stock down 5.5%.
I mean, actually, Sumera, the RBL Bank numbers or the Shriram Transport numbers, they're just about in line, right? I mean, flattish. So there's nothing extraordinary to change the direction per se on these names on a day when actually across the board NBFCs are selling off. I mean, look at L&T Finance, you look at Bajaj Finance, Shriram Transport, Edelweiss, Reliance Capital, Muthoot. I think there are about 8-10 names which are down over 4% right now. So it's a bad day for NBFCs, and these numbers aren't doing anything to change that sentiment as well. We take a very quick break here. We give you more on markets when we come back, and of course a couple of exclusives as well. My colleague Ritu joins in with a story on the banking side, the IBC process. So stay tuned for that. We're back in 2.